Hi there, Pro Trader, and welcome to today's Market Watch and Chart Analysis. This week, we're going to be looking at a lot of currencies and pick out the best to trade. Now, most of you would have been eyeing gold, like I have been doing, and I recall that in one of our sessions, I did talk about looking at gold for a sell, and this zone was marked out. And our analysis was to have gold break out of this zone. And as you all can see, this has happened. So let's drop down to the 15 minutes time frame and then we can begin to look at gold. But before we do that, a quick introduction for those who's joining us. My name is Gloria Adeoye, the Pips Grabbing Chick. I'm a Forex trader and I'm also a trainer. I help people trade the market profitably. So if you are a trader, you're not profiting, then send me an email at winningwithforex2.0@gmail.com and let's talk about why you're not profiting from the market and how we can help you trade to profit. So today we're going to be looking at gold and several other currencies to trade for the new week. So gold on the daily time frame looks very good and just about ready for a short. But like I always do, I like to do top-down analysis. So let's go look at gold on the monthly time frame. On the monthly time frame, there is a bullish teacup right here of gold, and there is a zone here that gold is looking to approach. Now this zone is a 1775.90 zone. Now a lot of sellers are lurking around this zone. They are patiently waiting for gold to get to this point, and then they look for a sell. Now when that sell happens, we're looking at a very serious, a very massive drop in price, very profitable drop in price. Potentially, if we're going to measure this impulse move or this bullish move on the monthly time frame, potentially we're looking at gold doing a 50% drop. All right, we're looking at gold doing a 50% drop or loss. Remember the Dow's theory that a market will lose or gain 50% of the time. So we're expecting a 50% loss. All of these has been a gain. Gold has been on an uptrend since 2018. Now it's currently approaching a supply zone. So we're expecting to see a drop, a reduction in price, at least to the 1400. And after that, we're expecting to see a massive increase in price all the way up to the 2100 etc. So investors or sellers or the bears are lurking around this zone and they're all looking to sell gold. They're patiently waiting to sell gold. As a retail trader, where will be your sell zone? In one of my videos, I did mention always trying to trade smartly. On the 10 rules to trading the BTMM strategy, I talked about trading smartly. If you've not seen the video, go back and watch the video. So how do you trade smartly? You trade in line with the big money. You move with the market. So if the money is for the buys, you go for a buy. If the money is for the sells, you go for a sell. That's the reason why you don't want to bury yourself in a particular move. If you're in a trade, you've been in that trade for so long, you're not in profit, it's possible that the market is not ready to go in the direction you're looking at it to go. So you don't argue with the market, you don't force the trade, you trade in line with the market. So how do you trade in line with the market for this? This has been on a bullish run. And on the daily time frame, let's just begin to go daily. I just switched to 15 minutes. On the daily time frame, this is what we're seeing. On the daily time frame, we're seeing gold at a zone because after that clear bull move, the market started consolidating around this zone. Started consolidating, looking to give us a corrective move, looking to give us a chart reset. All right, so it is that corrective move, that reset, that we are looking to trade. So take a look at this point right here. So the zone has been breached. Break of the zone, we'll see a retest, and then we're looking to sell. So this week we're looking to sell gold. Let's drop down to the 4 hours time and see what we have there. Good. So on the 4 hours time frame, we could see the candle that broke out of the zone, that broke out of the range. We said that one of the ways that you can begin to anticipate a change in market direction to see price consolidating. Some traders use the word price exhaustion or market exhaustion. All right. So having gone through a lot of periods of a bull run, the market begins to exhaust its buy power. So sellers begin to look to come in, because if the bulls are exhausted, then the bears will come in. But before that happens, there is likely to be a lot of manipulation around this zone, because that's what happens. That's how these guys make their money, because they know that you know that these should be a sell zone, and they know that a lot of retail traders will jump in for a sell, and then they'll just hit your stop loss just because. So you don't want them to just hit your stop loss just because you want to trade to profit. So what you do, I personally like to wait for price to expand. So this is technically a contraction. So the market has been contracting. So I want to see expansion. So after the expansion, I want to see the market give me a sell move or a sell confirmation or a sell pattern. So one of the sell patterns I look for is the M pattern or the head and shoulder pattern. So these are the patterns I begin to look at around these zones. So gold is looking just about ready for us to trade it. All right, so for this week, what will be a confirmation? I want to see a reversal pattern at this point. So it could be a head and shoulder, it could be a double top, it could be an M formation. And where am I going to be looking to see these patterns? I want to look to see these patterns on the 15 minutes time frame. So based off the rules to trading the BTM strategy, rule number 1 is price at peak formation. Yes, it is. Price is currently at peak formation high, right? And other things you want to look at, the EMAs, fanning out, and all of the other stuff. So for those of you with the template, you go confirm all of the other confirmation based off the video I did on the BTM strategy. If you don't have the template, well. All right, so last week the market did give us a clear first leg of a head and shoulder. So this is first leg, the head, and here's the second leg. So this week sellers are looking to come in. So what are you going to do as a trader this week? You want to look to sell gold. You want to look to sell gold, and you want to look for your confirmation. So as a trader, what are your entry triggers? Begin to note them. Begin to minute them on the chart, and then when you see them, you trade it. My goal is just to give you a bias, all right? I'm the trader that teaches you to trade on your own. I'm not a trader that teaches you to depend on signals or to depend on me. I'm the trader that teaches you to trade the market confidently, because it is only when you can trade the market confidently that you can call yourself a trader. If you're still depending on somebody to tell you buy, still depending on someone to tell you sell, you're not a trader, you're a signal taker. So don't call yourself a forex trader if all you do is take signals. If you are a forex trader, you will be able to know things to look out for to sell gold. So this is not me giving you a signal. This is me charting the market and telling you the buyer. So don't just wake up on Sunday morning and said she said she sell gold, and then you go sell gold. That would be really, really stupid of you. So you want to make sure that you analyze the market, you minute, you write out your reasons for taking the trade, because that's what makes you a trader. Trading with all of the knowledge, all of the things you've learned about trading, all of your common sense. Get what I mean? All right, so the bias for gold is a sell. So write all your confirmations for selling, and you go trade the market. Next, we're going to go look at the Euro USD, the Euro dollar pair. Now, before I look at the Euro dollar pair, I always like to look at the DXY. You already know that that's my trading style, that's my strategy. I always check the DXY first before I begin to create a bias for the dollar. Why is that? Because the dollar and the Euro dollar and the DXY, they are pretty much, inversely proportional to each other, if you know what I mean. So if the DXY is bullish, Euro dollar will be bearish, etc., or vice versa. So let's go to the monthly time frame on the DXY. Okay, so this is DXY on the monthly time frame. What structure do we have here? So how can we begin to analyze this market? What I do, I like to thin out the chart. For those who are attending my classes, they know I tell them again and again and again and again, thin out the chart, thin out the chart, thin out the chart. Why are you doing that? So you see the whole big picture of the market. So you see what the market looks like. You see the market structure, you see the market design, you see the market sentiment. Got it? Okay, so now based off this thinning out of the chart, based off counting market levels, this has finished. This is a level complete, and there is a bearish channel right here, and the market did do the bearish channel. Boom, boom. You already know. I don't need to draw it out, And then after that, what happened? There was a pretty much like a correction, and it looks like the market is going to go for a bull run, and it's been levitating, consolidating, and moving around the zone like that. And then what's happening right now? After that clear, see the very clear bullish move, the market gave us a sell signal. Now that sell signal is also giving us this kind of pattern. This pattern is clearly manipulative pattern. When you see stuff like this, it's a manipulative pattern. Why is that? Because this is a bearish impulse move. Sorry, let me blow this out. Alright, so this is a bearish impulse move. Strike one. And this is prices at this zone, isn't it? The price at this zone, and the market has been flirting around this zone, clinging around this zone, meandering around this zone. So it's just pretty much being stuck here, like I don't want to move. So first move came back down, woo, and all of that. So my price has been playing around this zone. Family. So price has been playing around this zone, and it hasn't left the zone. So currently the market is at that zone. You know the zone? That zone, B zone. So what do? Clone it. This technically is a rhombus formation, like it's just clear like that. See, it's a rhombus formation, and this is the C level. The C zone based on the rhombus strategy is an aggressive sell zone. Boom, boom, boom. So here you have it. The C aggressive sell zone. Well, okay. So C aggressive. Oh, is that how spell aggressive? Sell zone. Yeah, that should be the spelling. If it's not, you take it like that. So let's see what grammar you have to say. Load. Is it correct? Yeah, whatever. So C is the aggressive sell zone. At this point, you want to look to sell. Boom, right here. So what does that? What does this tell you as a trader? It tells you that you have a zone here. It tells you that you have a zone here. You have a place to watch. What will invalidate this zone? When price breaks out of it and close above it, that will invalidate the zone. Like there's no overthinking it. That's the rhombus strategy. The minute the market breaks that zone, because right now it is at the zone of decision, right? It's at the point where it should make a decision. And what's the decision? Are you going to sell, or are you just going to keep going up? So you keep your eye on that zone, because if it's going to sell, then you sell. If it's not going to sell, then you buy. So this is your zone of decision making, zone of, what's the word? That's what I'm trying to come up with. Zone of blah, 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 blah. Can't remember. Okay, so this is the zone where you begin to try to make a decision. All right. So on the monthly time frame, price is at the C aggressive sell zone. So let's drop down to the daily. I don't really, there's no point going to the weekly. So the same thing we'll see there. So let's drop down to the daily time frame. You see how the market has just been around this place, like no definite move. It's just flirting around, inducing traders buy. Ooh, he's buying, sell. No, buy. Oh, sell. Oh, so it's just messing with all of the emotions of traders. So what will I do as a market maker trader? As a market maker trader, all I will do is to see my reversal candlestick pattern. That's what I want to do right at this point. So it could be a railroad track, it could be a hanging man, it could be any of those candlestick formation price action strategy that you have learned. If you've not learned it, like I said, send me an email, Winning with Forex 2.0, and attend the Forex class. Some of you just want to learn Forex for free. Well, I wish you all the best. But if you want to learn Forex and trade to profit, send me an email to winningwithforex2.0@gmail.com. Let us help you trade profitably and stop wasting your time. Okay, so I'm going to use price action at this point to confirm my entry. Okay, so on the daily time frame, market is ready. So where will I look for price action strategy or candlestick reversal stuff and all that? On the 15 minutes time frame, that's what I look for. I'll look for it on the 15 minutes, see how it induced people to sell. Boom, and then what did it do? All the people that sold, those that didn't take profit, it took them out straight up like before the market closed on Friday. That's one thing I've noticed about Friday trading. They tend to take all the profit just so you don't have that opportunity to spend the weekend drinking glasses of beers and eating suyas and stuff. They try to take all the money back so you don't make money. Right? So here's the thing, you want to keep your eye out on the zone. So rule number one, dollar index is at the zone. What zone is that? The C sell aggressive zone. Step number two, or rule number two, or strategy number two, I'm looking for sell confirmation. That's what I'm looking for. So if I'm looking for sell confirmations on DXY, what am I looking for on euro dollar? I am looking for buy confirmations. That's what I'm looking for to do on euro dollar. So until I see those buy confirmations, I will not trade this market now. One of the things that I've been saying, and I can't overemphasize it enough, is for you to trade only when the confirmations are clear. That way, if there is a mistake, if the market hits your stop loss, you won't need to go blaming anybody. But as far as trading goes, you can't trade the market successfully blaming someone. I guess that's the reason why some people would rather not trade the market themselves, rather somebody else trade for them, or somebody else give them signals. Why? So they can blame it on someone else. But the truth is, if you want to trade for the long haul, you need to take responsibility. You need to trade on your own so that if you lose the trade, you know why you lost the trade. You can easily account for why you lost the trade and you can begin to make amends. But if you're dependent on someone to trade for you and they blow your account, you don't even know why they blew your account. You just be lying in bed every day crying, like getting angry, right? And you don't even know what happened. So it's very important that as far as trading the forex market goes, you take responsibility for your action. It is your money. So control your money. All right. So the euro dollar on the monthly time frame is also at a buy zone. And what zone is that? The C aggressive buy zone. I already marked this up a while ago and I've just been watching it. So this week is going to present a lot of great opportunities for these two guys, for the euro dollar and for the gold. So currently price is at the C aggressive buy zone. So two things, you could either wait for it at this point or could wait for it at this point. So let's flip this. Let's flip this move. All right, so you can see that that is the 78.6 zone, 78.6 region. That's the point where we're looking to trade this pair. Now, the reason why I have two zones, you see when I said you begin to look for confirmations, and if that confirmation doesn't align you, get out. So the reason why I have two zones right here, because here there is a bullish harmonic pattern that is giving us an entry at this point, and here is a rhombus formation that's giving us entry at this point. So we've got two zones to work, zone 1 and zone 2. So I'll keep my eye on this zone. So what is my confirmation for trading at this zone? I've already said it is to be price action based on the 15-minute time frame. So it could be a railroad, it could be a candlestick formation, or it could be just a pattern, a bar reversal pattern, etc. Got it? All right. So euro dollar, look for buys, look for entry confirmation on the 15-minute time frame. Gold, look for sales, look for entry confirmation on the 15-minute time frame. All right, just for fun, I'm going to throw in an indices or two. So let's see if US 30 has something worth trading. The United States 30 company. So US 30, let's see if it's got something to trade, something to trade. Personally, well, I don't know, and I'm not even going to trade this because there's a lot of issues around it. So let me waste my data looking at it. So let's go check Euro GBP. Okay. So on Euro GBP, there's a lot of iffiness, around it. There's a lot of iffiness to it. But so this month the market is at a bullish zone, Okay, so price is also currently at a zone or at a point of decision. So it's going to make a decision at this point. Well, what will it be? Is it going to be a buy? Is it going to be a sell? So the monthly time frame, frankly, I can't really see shit. So let's just assume that the market is at a supply zone, yeah, as a supply zone, to sell zone. So let's drop down to the weekly. Let's see if we can see something on the weekly time frame. So that's what I do. If I don't see too much on the monthly time frame, I try to go to the weekly time frame, right? If I don't see much. Now see how the market closed last week. This is what we call, let's blow this out, let's blow this out, let's blow this out, let's blow this out. I want you to learn something new today for free. I want you to learn something new today for free. Personally, I'm someone that likes to deliver. I like to give out loads of value. That's who I am. That's what I represent. I'm all about results, all right? Not all about hypes and tooting horns. I'm just all about results. So I'm going to give you this for free, for free, for free, for free, for free. You're welcome. So the market closed last week with what we call a Marabozu. Now this kind of candlestick pattern is the kind of pattern that signals continuation. Now if you see the market close like this, it's just simply telling you that this market is going to continue for a bull run. So this is a bullish Marabozu candlestick pattern right here. So what the Marabozu candlestick pattern tells you is that the trend is going to continue. That's just what it's telling you. That this is going to be a continuous trend. And what trend is that? A bullish uptrend. So good thing we mark that as well. So we're going to see what it looks like on lower time frames. So on the weekly time frame with a bullish Marabozu candlestick pattern. So what I would like to see, say Monday, Tuesday, we'll see a little pullback. That's what we'll see. A little pullback, be it on Monday, be it on Tuesday. But what we are going to be looking out for pullbacks, right? Because coming to buy here is foolish. You need to wait for that pullback. So it could give you, let's flip this move. It could give you a, let me make this out more. So it give you a 50% pullback, or even just a 38.2% pullback. Like, yes, you could see pullbacks like that because this is a very, very strong continuative candle. All right, so let's flip it again. Let's flip this move. Let's flip this move. Okay, so what are we expecting to see? Sorry, I'm taking the fib from sell direction. So we're expecting to see either a 38.2 level of retracement or a 50% level of retracement. That's just what we're expecting to see. This thing is still not clear. Let me drop down to the daily time frame. I want to see the fib clearly. Okay. So it's perfect to just flip it from. So let's drop down here. Good. Alright, so let's set this. Okay, so let's blow this out. Alright, so there we have it. So let's go back to the weekly time frame. Oh, you know what? Let's just mark this zone. So what are we expecting to see? Expecting to see a little pullback. Yeah, a little pullback, either to this point, or you know what? Let's just stick to this point. So mark out this zone. Okay, just, you know, for the sake of conservation, or for the sake of sticking to rules, mark out the 50% zone. So let's go back to the weekly time frame. Alright, so on the weekly time frame, you can see how we've been able to fib. On the weekly time frame, you can see how we've been able to fib these two zones, eh? So this will be your zone of pullback, the zone where you begin to watch either at a price at 0.88,500 or price at 0.88,212. So that's your zone to watch, because this is a Marabozu. We're just expecting the pullback, and then we'll take the market and we'll ride with it and we'll run with it. So let's drop down to the 1 hour time frame, for example, and begin to watch what we need to do. Alright, so on the 1 hour time frame, this whole thing happened the whole of last week. Like the whole of last week, it was just on the bull run, bullish move, clear, you know, directional move like that. So this week, possibly, we'll see that pullback, we'll see that little drop in price, and then remember, the direction is a bull move. Or the direction is a bull move. I told you, when you see a Marabozu, you're expecting a continuation. So that bull continuation, that is a signal that it's about to continue. All right, so what you want to see happen, you want to see a little dip in price, either to the 38.2 or 50%, and then hello traders, guys, ladies, girls, babies, daddies, mummies, grandpa, grandma, buy the crap out of this pair. And yeah, you can send me an email to say your thanks. That won't be bad. So Euro GBP, the bias is a buy. Look for entries around the 0.88212 or 0.88500. So as a trader, you manage your reasons for entering the trade. You begin to look for things you need to see to enter the trade, and then you take your market. That is what it means to trade. Now, before I wrap up today's session, I'm just going to say a few things. Trading the forex market, yes, it comes with a tremendous amount of risk, but it also comes with a tremendous amount of taking responsibilities. I see a lot of people send me emails and private messages, and I just know right off the bat that they just need something easy. Now, if you want something easy, all you could do is look for someone that is trading and offering 10%. But know that when you lose your money, of course, I'm sure you'll be ready for all of that. So, should the person run away with your money, or the person scams you, and the person, rips you of your hard-earned money, then you know you have yourself to blame. But if you want to trade forex responsibly, you want to trade forex like a pro, you want to trade forex like a real forex trader, then you should be ready to commit to learning. You should be ready to commit to the market. You should be ready to take this as a job. This is not a hobby. Right? Whoever told you that trading the forex market is a hobby, like something you go to Las Vegas, walk into a casino, and then begin to play the roulette and the blackjacks. That's not what this market is all about. Whoever told you that just told you a big fat fucking lie. So what you want to do, if you want to trade the market, you want to trade the market responsibly, then you need to commit to learning. You need to commit to trading. You need to be ready for the market. And that's where I come in. I teach you to be ready for the market. So if you're ready for the market, send me an email, because I'm ready to work with serious traders. I don't want to work with people who are just here for the thrill. I'm not a thrill rider. I'm not a thrill surfer. I am here to teach you how to trade. So if you want to trade, send me an email, Winning with Forex 2.0, and I'll help you trade. If you don't want to trade, then I just wish you all the best. Alright, so my name is Gloria Adeoye, again, the Pips Grabbing Chick. I'm the creator of the Trade to Profit Masterclass, a 17-part video that basically talks about market structure and everything there is to know about trading profitably. So till I see you again in the coming weeks, we'll be having our daily market watch and market analysis. I want to wish you the best, wish you a profitable week and a pipsful week. Have a great evening. Bye-bye.